please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, global cues are mixed this morning. Of course, we didn't have US market. Hang Seng is up, and I think that's propelled up. That's actually moved to high point of the day. In fact, up 350 points now. 1.1% higher is what we have on Hang Seng. So all of a sudden, the Asian cues are once again looking strong. This morning, it looked like maybe the picture was a bit mixed, but now clearly in favor of the bulls. And the SGX Nifty has picked that up and has moved to high point. Ashwani Gujral, Sudarshan Sukhani, and Prakash Gaba now join us. Good morning, gentlemen. Ashwani, we missed you yesterday. We had a near trend day on the bank Nifty, but Nifty fell off a bit from the high point. Your thoughts on how to approach trade today?
Good morning, Anuj. I think yesterday was about three stocks: HDFC Bank, ICICI Bank, and HDFC. If you take that out, I don't think you will have even a 40-point gain that you had yesterday. Having said that, the best buying opportunities are coming when democracy is in danger, like it was on Friday. So, if you buy those sort of dips, you are able to make money. But today, post the open, whether, you'll get great follow through, I have my doubt. I would possibly still buy on the bank Nifty because HDFC Bank and ICICI Bank both have made very strong moves on the upside. So that may continue. But on the market, most of the day, yesterday, we were going down. The market bet was 1:1. So that way, it's basically financials and these large banks which can, hold the market higher. I wouldn't go by all this, Hang Seng and all these guys moving up. They weren't there yesterday. We've done what they are doing today.
Okay. Good morning, Ashwini. Is there more money to be made? I mean, okay, it's an aside. I know we will come to stocks in a bit. But yesterday, actually, even those insurance companies, HDFC, Standard Life, the insurance companies, as well as ICICI, all of them were also rising. Is there more money to be made in these subsidiaries of ICICI and HDFC rather than the main guy?
I think the news was about ICICI. I mean, in old age, it's getting into, portfolios. So I guess because it's been in a very tight range for a long time, this breakout may sustain for a bit. But ICICI, Pru, etc., they've gone through their large corrections. And overall, yesterday's rally has started with a financial flavor. So chances are, till this rally continues, financial stocks overall will do better than previous rallies.
Okay, Sudarshan Sukhani and Prakash Gaba are also here with us. So, gentlemen, morning to both of you. Sudarshan, what's your sense of how things could progress today? Because yesterday was a bit iffy. We had a bit of intraday volatility. The mid-caps came off. Slight bit of caution today as well, you think?
Yeah, good morning. Well, yes, you've already explained what I was going to say. We've been long in this market for many days. Today is a time to book profits in the Nifty and also in the Nifty Bank. Even though the Nifty Bank actually closed at its highs, had a trend day yesterday and a breakout day, the Nifty is the index which is going to control this market. And the Nifty's performance yesterday was not very satisfactory for the bulls. The fact that it came off its highs, closed in the middle of the range, and did not actually give the sense that it's roaring to go up. So my suggestion is, if you have long positions, and you should be, close the long positions today. Take intraday trades only on the long side by buying dips, and you have to define what the dips are. But do not carry any positions, step aside.
Okay, do not carry any position. Prakash, good morning. We were discussing it yesterday. The long trade is still on for you?
Yeah, good morning, Anuj. Yes, the technical targets, logical technical targets, 10,836. We did see some kind of dampener on Nifty, but the Bank Nifty was still up. So there's a zone of support. The zone of support is between 10,680 to 10,710. So even if we get dips until these are buying opportunities, we may not get 10,830 today. Maybe we may get, if not today, then tomorrow. If not tomorrow, then day after. But the 10,836 still stands. So buy dips and hold on. We could see some kind of a consolidation. Yesterday was the banks had Nifty. If the rest of the market added it, perhaps we could have seen a higher levels. But looks like that's still on.
Okay. Well, so positive, but only on dips. Ashwini, stock-wise?
See, GMR Infra made a big move yesterday. That's a buy with a stop of 20, target of 27. Capital First gave up all the gains it had in the morning. Now that's not very positive. Obviously, I don't understand the deal contours too much, but for me, if something opened 8% higher and came off or lost all the 8%, that means the bears won the day. So that is a sell with a stop of 860, target of 800. RCF is a buy with a stop of 106, target of 118. Radico Khaitan is a buy with a stop of 320, target of 337. And India Cement is a buy with a stop of 197, target of 210.
Okay, just want to point out that, of course, GMR and Capital First are both in F&O ban. You can still trade them, of course, in the cash market, but may not be available in the F&O market for normal retail. Of course, some HNIs, if the brokers allow, you can still do it with some penalty. But Sudarshan, good morning. What stocks are you trading?
Yeah, good morning. It's a little confusing today, which means I actually have two short ideas also. One is Bharat Petro, BPCL, where the decline is now coming to a support point, and if the support breaks, a larger decline is imminent, and that's probably related to how crude is now crossing, Brent is now crossing $70. So BPCL is a short sell, and Bank of India, which is one of the weaker PSU banks, and that's saying a lot. I mean, PSU banks are weak, and this is even weaker than them. So there are two short sells also. Keep short sells only intraday. National Aluminium is a buying opportunity. The stock had a deep correction. That correction seems to be getting over now, and a small and steady up move could be in the offing. Tata Elxsi is another buy. A strong rally, as has happened in most mid-cap IT stocks, a 4-day consolidation, and that 4-day consolidation could break on the upside. And Titan is a buy. Titan has been in a strong uptrend. There was a 3-day dip. 3 days is as much as a strong stock will give on the corrective side. So that correction is probably over, and yesterday it did cross the earlier day's high. I would be a buyer in Titan also as a positional trade, as a swing trade. But it's a day of caution for me.
Okay, thanks for that. Day of caution. Prakash, you have 3 buys and 1 sell today?
Yes, Sonia, I was thinking of 2-2, but then finally I gave 3-1. I'll start with the Havells India. That looks good. Seen a good up move yesterday. I think the corrections got over. The up move is starting. Target on the upside is 570. Stop below 553. I have M&M Financials as well. That had a good last hour journey. Looks like it's heading to levels closer to 505 zones. May take again a day or two for that. Stop below 485. I also have National Aluminium. Seen again a corrections got over. Similar pattern like Havells. Can climb to levels closer to 90 zones. Stop below 85. And a solitary sell is Bharat Financial. Looks more of a fatigue than exhaustion. Perhaps we could see a slide to around 1000 zones. Stop above 1027. A very tight stop, perhaps.
Okay. Gentlemen, we're going to come back to you with lots more stock questions. But for the moment, a bit of attention on some macro numbers that came in yesterday. The trade deficit for December came in, and it was a 37-month high, touching nearly $15 billion in December. The monthly run rate normally between $10 and $12 billion or even $13 billion is par for the course. But when it touches 15, there is a spot of bother. Also bothering was a 71% spike in gold imports. That was, of course, one of the factors to blame, not entirely. There was also, of course, higher crude imports. D.K. Joshi, chief economist at CRISIL, and Anant Narayan, the FX expert, are joining on the phone line to explain this to us. Good morning to both of you, gentlemen. First to you, Mr. Joshi, would you start worrying now itself? I mean, I think this is the second or third month that we have gone from 13 billion to 13.5, 14, and now 15 billion.
Well, of course, I mean, it's going to expand the trade deficit. It already is, and which will get reflected in the current account deficit also. Now, I think the issue with the trade has been twofold. I mean, one is the tactical, which is that the global recovery in trade, global recovery in growth, we could not benefit from it because of our domestic glitches. They did not allow us to take advantage of that. I think that's still continuing. And that's one of the reasons why exports are underperforming compared to our peers. And imports are growing because oil prices have gone up. We also export petroleum products, but that offsets a part of the hit to the trade deficit. But still, we import much more than we export. So clearly, I think that's a pain point. The other pain point, I think, in the data is that that the The labor-intensive segments, if you look at textiles, ready-made garments, I think they're not doing well. The gems and jewelry also grew at just 2.3%. These are the sectors that generate employment. So the hit is more prominent in the labor-intensive side. Now, I think if I look ahead for let's say for 2018-19, I would see a better situation because at least the domestic glitches would be taken care of. I think the GST issues are getting resolved, and exporters probably will not have to face the refund issues the way they faced this year. So clearly, I think we'll be able to take more advantage of the upturn in both GDP growth and the trade growth in the global economy.
So basically, Mr. Joshi, your short point is that this is a passing problem and that the trade deficit is likely to come down soon. If yes, by when you think?
Well, I think in next year's, in 2018, I mean, for 2-3 months, I do see this problem continuing. Okay. So this fiscal year is gone. In the next fiscal year, you will see a better situation. I mean, if oil doesn't move beyond $70. Having said that, I think I would like to re-emphasize that our trade, our exports are losing competitiveness. I think that is fairly well established. We've also tried to compute, and we find that so that's a long-term issue that needs to be addressed anyway, I think.
Sure. Okay, in fact, let's get Anant Narayan also on board. Anant, that seems to be the biggest disconcerting factor, right? The slowdown in exports. In fact, year to date, the export growth is just 12 to 13%, despite a favorable base. Do you expect any recovery anytime soon?
Morning, Sonia. Yeah, I do think exports will probably recover. In fact, I'm hoping that some of this spike that we've seen in gold imports and precious gems imports is maybe restocking and will show up as exports subsequently. I think things like GST and the teething problems there did cause some problems for exports, and hopefully that will get behind us pretty soon. But the trade deficit trend, going close to $15 billion, that's a worrisome sign. And even if exports starts to recover, the fact that commodity prices are the way they are does seem to indicate that we are going to see tough times on the trade deficit. Our current account deficit is now heading towards the worst number since FY13, and that's not a healthy sign. And that's something we have to watch out for.
Okay. Anant, good morning. At the moment, it's not a problem because the dollar is weak anyways. So, any macro weakness we have on the rupee will not result in the rupee crashing or anything like that because the dollar is so weak. A two-part question. Can this dollar weakness continue? And at what point would you worry about, a possible sudden rupee depreciation?
You're absolutely right, Latha. I think it's come at a, while the number is pretty troubling, it's come at a decent time because the dollar itself is as weak as it is right now, right? It's at a 3-year low. Euro's at a 3-year high. Yuan is at a 3-year high. So yes, even today the reaction ought to be muted, maybe by 10 peso or so weakening, and then probably recovery from there. And let's also remember the carry trade still favors the rupee. You still earn a lot of return on the rupee side. So yes, no immediate reaction as such, but there is a growing vulnerability, Latha, which can't be denied. If your core flows are negative, if your current account deficit and FDI and FPI and equity put together is negative, and all that's sustaining the rupee is the fumes of a carry trade. That's not a good sign. So now, where does dollar go from here? Unfortunately, that's a $1 trillion question. Things do look pretty soft for the dollar. The momentum is extremely strong. And let's not forget, we have the threat of a U.S. shutdown coming up later. As it is, Europe is talking about unwinding of the QE, etc. So it does look like the dollar weakness is here to stay, which should be good news for the rupee. Having said that, I think rupee will underperform other currencies.
Okay.
To the extent that euro or yuan or the Asian currencies strengthen against dollar, I think we will buck that trend, which might be good. Second, if we do see an external shock, including, let's say, oil going up to 80 and 80 plus, I think that's a huge vulnerability because we are right now living on unhedged open exposures, which can see a reversal.
Okay. All right. Well, anyway, this is a problem for the future. For the moment, we shouldn't worry because the dollar is weak. Mr. Joshi and Anant, thank you very much for joining us. Well, just a brief word over there. If for some reason the dollar were to turn turtle and strengthen, then our problems will look very bad. But for the moment, I think we can be spared the blushes. Okay. Well, one of the stocks that will be on our radar is the one that's always on our focus area, the Bombay Stock Exchange. The stock itself will be on our radar. The company has approved a share buyback of 166 crore. This buyback comes within the first year of the exchange listing. Ashish Chauhan, Chief Executive Officer of the BSE, joins us on the phone line for more. Good morning, Ashish. Good to have you with us always. Why this buyback now? I thought you all will have a lot of expansion plans with possible permission for commodity exchanges.
No, I mean, we have basically a lot of cash on our balance sheet, which is known even before we listed. When we listed, we actually went for offer for sale, which is where the existing shareholders sell their shares to other shareholders, newcomers. So effectively, we didn't gather any new funds from the shareholders when we listed.
Yes.
And we still do have some real good balance in our balance sheet. And so we will continue to use that in optimal manner. But there were kind of requests from existing shareholders, institutional as well as retail, saying that since you have so much, can you do something? And the board decided to go ahead with this.
Okay. Ashish, good morning.
Good morning.
Interesting. You know, of course, everyone knows the kind of cash that you have, and that I think is only going to grow. But the other issue is, could you be looking at inorganic opportunities? One possibility doing the round is to merge with a commodity exchange. Now that, you know, we'll have cross products being, you know, allowed maybe from October this year. So to become a, you know, stronger and more cohesive sort of exchange, is that a possibility?
Currently, there are no plans. We are basically very keen to start on our own. In fact, you may recall in 2015, we were trying to set up a new commodities exchange. And we were told to wait because the regulators will get merged and then they will allow us to do the same in a single segment. And that's how we have planned. And after 2.5, 3 years, that's being allowed. So we are currently ready. Our technology, we think, is a USP we have been able to also gain market share in currencies on the back of our technology. So we think we have something up our sleeve and we'll continue to do that. But if something comes up, why not? But currently, it's more important to just focus on doing our own.
So if you plan to start on your own, Ashish, what kind of a timeline are we looking at here? Will it be within this calendar year itself?
It depends on the regulations, but we have announced on 29th January, we are going to launch mock trading. So effectively, our members would be able to taste what is coming. Of course, trading, as you know, looks the same for the members. We need to do some back-end work, which we have done for the last 2.5 years. We know what other exchanges do in commodities, so that has helped us prepare ourselves well.
So no question of an M&A, no question of buying up an existing exchange.
Yeah, currently there is, it's not on the cards.
Okay. Well, I just wanted to come back to the buyback for a bit. What is the, you know, it's a tender buyback?
No, it's
buyback from the market?
Yeah, it's buyback from the market.
Okay, not a tender buyback.
Not at all.
Okay, what is the maximum you will spend on this and how much free cash will you have left after the buyback?
See, basically, we have kept the price at 1,100 rupees.
Okay.
And so 1,100 is the maximum at which you can buy. Below that, whatever is sort of available, we'll continue to buy. The scheme is supposed to be open for 6 months as per the regulations. Before that, if we exhaust 166 crore, then it gets over then. And so that's basically the contours of the scheme.
And what is the cash on the books now?
Currently, as of the 31st March 2017, it was around 666 crores. It has added some more because of the stake sale of CDSL. And then this money goes away. So basically, there will be enough and more available going forward.
And when should we hear about the commodity exchange?
We have already announced the first step of starting the mock. And so as and when the regulations become clearer on October 2018, we hope to launch.
Okay, your currency derivative segment has also started to do well. Do you guys have any plans to charge on for this particular segment?
Oh, we have been charging for now 4 or 5 years, three years now. In fact, first year we did not charge, and then we were told that we will have to charge. We started charging.
Okay.
And we have been charging reasonable sums. And despite that, now we are close to 60% of the market share.
Fair.
And so that tells you that basically perception, even you have, that we have not been charging is wrong.
All right.
Okay, all right. Thanks for that clarification, Ashish. Yeah, have a good day. Thanks for joining us. All right.
Okay, I just wanted to take on the last point. He said that it's 1100 rupees and they will keep buying. Now it's 980. So on that note, let me invite Prakash Diwan into the conversation. Prakash, it's sure shot that the stock will now start climbing its way above 1,000?
Looks like, and couple of interesting things that are happening. One is, 2nd of February is when that 1 year lock-in gets over. So they'll have to do something before that, because a lot of people who have probably bought it on the institutional side might also want to, I mean, they're free to get out. I'm not saying they would get out, but so that's a big milestone of sorts. The second thing, is, so it's like where you heard the news about a large investor in MCX wanting to exit.
Yes.
While BSE is gearing up to get into commodities. So it's a long BSE, short MCX kind of a scenario that's developing. But I think the bigger story lies in the growth that CDSL will bring in after all this. It's very easy for CDSL to expand incrementally with the least of cost in terms of distribution costs and marketing costs. And you actually have newer clients. Like, I don't trade, let's say, in commodities today, but if I'm an active BSE client, and if I want to, let's say, go long crude or, some impulse that comes in, it becomes much easier to have within the same platform to do that. So I think that's going to be an emerging trend of sorts. So, and 1100 crores, 1100 is the market rate. Yes. Is a limit over the higher ceiling, but my sense is there's a regulatory limitation that you can only do 3% of a buyback from the cash that you have. They could probably have another buyback after this also.
Okay, so the stock, of course, has seen a bit of a rally over the last 1 month or so. But Prakash, good morning. Your thoughts on Delta Corp?
Oh, wonderful. I mean, it looks like, of course, the base effect is something that we need to bring this into. Though I'm told on the ground there was not much of negative impact with demonetization last year.
Except for the 15-day period.
Except for, that 2 weeks. So looks like, Delta Corp is a story that's finally seeing the contours of what it can do with just the core casino business kicking in. Now, if the other properties, which is the Radda and the Rummy, online businesses, and of course the new real estate spin to the whole developing story on next to the new airport. So we heard this, Anuj, we've kind of, casually discussed this at times, that Delta Corp is a, business that's evolving, rather mutating so fast. It's not even evolving gradually. It's mutating into, morphing into something very different than what it started off. So I'm very positive, but I think the market has kind of sensed the improvement in the numbers. That's why it's already priced in quite well. Okay. Any dips you get in the market could definitely be an addition to the stock pool.
Actually, I was looking at the year on year. I mean, you may complain year ago there was demo, but if you look even quarter on quarter, September quarter, their revenue was about 103 crore and now it is 124 crore. Quarter on quarter, if you grow 20%, I mean, what does it signify?
Okay, so usually the third quarter is very promising for them.
Yeah. So I wanted to move from gaming to education because V-Learn's numbers are also very good. I mean, 70% revenue growth. Is that a stock you like?
I don't particularly like it, but here what's happened is that Mount Litra and all of that, properties that they developed have suddenly started kind of, throwing up cash. And there's this huge change in the environment, Sonia, on the education side. So what's happening is in the ecosystem, a lot of the smaller players have started kind of, either moving out or there's a consolidation that's happening. So the bigger brands have a larger share of the pie, and that gives them a lot of pricing power. That's reflective in the numbers. And this is something which was expected a couple of years back. But with the likes of Treehouse and all actually exiting from the market side, a lot of the larger players will tend to benefit disproportionately. So quite positive on the sector, but not particularly on Z.
Oh yes, Mount Litra is a wonderful school, but I had gone there to just check.
Okay.
But the fees is 5-6 lakhs these days for these schools.
It's become the most lucrative.
No, and in schooling, unlike what we understand, very interesting what Anuj is saying. After you have kind of evolved the curriculum and the processes, especially the recruitment and the value chain, right from the trainee teachers to the finished goods of mature people in the team. Then you just need to kind of scale up, and you open a new school, and the incremental cost is so nominal, and so it's going to be definitely very promising. Of course, Sonia has a few years to go and try that out, but she's
already making inquiries, and she's found out that it's running into lakhs.
No, and I get all my feedback from Anuj, so I don't need to do any major work here.
Anuj has done the research.
All right. Okay, we'll take a break. The pre-opening rates will be with us, and we'll also have some F&O strategies coming your way.